Have you ever wondered what would happen if the United States government started buying Bitcoin? What if I told you there's already a plan in motion that could reshape the entire global financial system using America's $600 billion gold reserves? Today on the TFTC podcast, I'm joined by Mel Mattison, former CEO of 3 different broker-dealers and an expert in global financial markets. He's been tracking a developing story that very few people are talking about: how America could use Bitcoin to counter the BRICS nations' attempt to create a new gold-based financial system. In this conversation, we dive deep into Senator Lummis Bitcoin Act, explore how the U.S. Treasury could convert its massive gold reserves into Bitcoin, and discuss the strategic implications of this move for the global economy. Having spent years building Bitcoin companies through 1031, I've seen firsthand how Bitcoin can transform existing systems, but what Mel reveals about the government's potential plans takes things to an entirely new level. If you enjoy this breakdown, hit the like button and subscribe to stay updated with the latest from the TFTC podcast. You can find the full episode in the description. Let's dive in and see exactly how this $600 billion strategy could work.
I think you could almost even take that idea one step further and see how it could be possible to essentially attack the BRICS system, which is currently being based on gold, by inflating Bitcoin, buying Bitcoin in a strategic reserve, and funding those purchases with the sale of U.S. gold stockpiles. I'm not necessarily in favor of that. In fact, I'm a longtime precious metal holder, but you can see kind of the game theory involved of let the BRICS build up their system, Russia, China spending all this money on gold, and then the largest known holder of gold at over 8,000 metric tons, over 260 million ounces, starts to sell it into the market, how that collapses the gold price to buy Bitcoin, inflates the Bitcoin, which then has, the beginnings of becoming a monetary base.
Let me break down what Mel just explained. The United States has a massive strategic advantage when it comes to Bitcoin and gold. We're sitting on over 8,000 metric tons of gold, which puts us in a unique position to influence the global monetary system. The BRICS nations, Brazil, Russia, India, China, and South Africa, are building their own monetary system based on gold. What Mel suggests here is fascinating. The U.S. could potentially use its massive gold reserves as a weapon by selling them to acquire Bitcoin, effectively attacking the BRICS' gold-based system. This would push down gold prices while simultaneously driving up Bitcoin's value. As someone who runs 1031, a venture fund focused on Bitcoin infrastructure, I've seen firsthand how powerful Bitcoin can be as a strategic asset. This isn't just about making money, it's about reshaping the global monetary landscape. The strategy Mel describes is like a high-stakes chess game where the U.S. could use its gold position to gain an advantage in the emerging digital monetary space. It's particularly interesting because it would allow America to maintain its monetary dominance while transitioning from physical to digital reserves. This kind of strategic thinking shows how Bitcoin isn't just a speculative asset, but a potential tool for national economic security. What's particularly interesting is how this ties into actual legislation that's been proposed, and you won't believe what Senator Lummis has planned.
I think you could almost even take that idea one step further and see how it could be possible to essentially attack the BRICS system, which is currently being based on gold, by inflating Bitcoin, buying Bitcoin in a strategic reserve, and funding those purchases with the sale of U.S. gold stockpiles. I'm not necessarily in favor of that. In fact, I'm a longtime precious metal holder, but you can see kind of the game theory involved of let the BRICS build up their system, Russia, China spending all this money on gold, and then the largest known holder of gold at over 8,000 metric tons, over 260 million ounces, starts to sell it into the market, how that collapses the gold price to buy Bitcoin, inflates the Bitcoin, which then has, the beginnings of becoming a monetary base.
The numbers Mel just laid out are mind-blowing when you really think about them. He's talking about the U.S. government potentially buying 200,000 Bitcoin every year for 5 years. That's 1 million Bitcoin, nearly 5% of all Bitcoin that will ever exist. What's fascinating is how they could fund this purchase. The U.S. government's gold holdings are worth about $600 billion at current prices, but here's where it gets interesting. By announcing they're selling gold to buy Bitcoin, they could create a self-fulfilling prophecy. The gold price would likely fall as the biggest holder starts selling, while Bitcoin's price would rise as the world's most powerful nation starts buying. This isn't just theoretical, it's actually being discussed at the highest levels of government. The beauty of this strategy is its simplicity. Use an old asset to acquire a new one, while simultaneously weakening potential competitors who are heavily invested in the old system. It's like playing both offense and defense at the same time. This kind of strategic thinking shows why Bitcoin isn't just another investment. It's a potential tool for maintaining American economic dominance in the 21st century. The mechanics of how this could work without needing congressional approval are even more interesting.
What Senator Lummis talked about in her Bitcoin Act was essentially extracting money from the Federal Reserve by demanding that the Federal Reserve revalue the Treasury gold certificates. So back when gold was around $42 an ounce, I think, the Federal Reserve took custody of the United States gold and gave the Treasury certificates that were valued at $42 an ounce. Lummis says in the bill that to pay for the Bitcoin Act, she's going to demand that the Treasury submit those certificates to the Federal Reserve Banks. Federal Reserve Banks need to issue new certificates at a market price of gold and then deliver the difference between that $42 an ounce and the market price in cash funds to the Treasury. And so I think there are ways without having Congress do it, that you have the Treasury use extraordinary powers with which constitutionally it has but has not used, that don't require an amendment of the Federal Reserve Act.
What Mel just explained is a fascinating quirk in the U.S. monetary system that could allow for this Bitcoin purchase without new legislation. Back in the 1970s, when the U.S. moved away from the gold standard, the Federal Reserve was given custody of the nation's gold at a fixed price of $42 per ounce. That's right. On the Fed's books, gold is still valued at $42 per ounce, even though it's worth around $2,600 today. Senator Lummis's Bitcoin Act proposes using this massive difference in valuation to fund Bitcoin purchases. By forcing the Fed to revalue these gold certificates at current market prices, it would create a massive pool of money that could be used to buy Bitcoin. This is the kind of creative thinking that could reshape our monetary system. Think about it. There's a roughly $2,558 difference between the book value and market value of each ounce of gold. Multiply that by millions of ounces, and you're talking about an enormous amount of purchasing power that could be unlocked through a simple accounting change. It's a complex maneuver, but it shows how existing laws and structures could be used to bring Bitcoin into the mainstream of American monetary policy. This approach is particularly clever because it doesn't require new appropriations or complex legislative changes. It simply uses the existing system in an innovative way. If you think whether the U.S. government will actually execute this strategy with Bitcoin, or if you think BRICS gold-based system poses a real threat, let me know in the comments. I read every comment, and I'm especially interested in hearing from those of you who work in finance or government. And if you think this strategy is bold, you need to understand how it connects to what's already happening with institutional Bitcoin adoption. In my last video, I explained why pension funds are about to start buying massive amounts of Bitcoin, and how this could accelerate government adoption. The relationship between pension funds entering Bitcoin and potential government strategic reserves shows how close we are to a major shift in the global financial system. Click the video on your screen now to understand exactly how pension fund Bitcoin adoption could reshape the entire financial system. If you want to stay ahead of these crucial developments in the future of money, make sure to subscribe to the channel where we break down these important stories every week. Stay humble, stack sats.